Hello, welcome back to the channel. I have some cool things I wanted to share with you guys today about M1 Finance and Portfolio Visualizer, how they work together really, really well. If you haven't yet watched my previous video, before you even start investing, it talks about things that you should think about. So what are your goals? What's your time horizon? And what is your risk tolerance? So once you watch that and think about those things, the next step is to start thinking about what to actually invest in. What companies, what funds, or different products like bonds or real estate funds. What do you want to actually invest in? So once you have your M1 Finance account set up, I have a link in the bio if you want. No pressure though. You can go to the research tab here and start looking at different stocks, right? Or different funds, gold. I don't know. I don't know what all of these are. S&P 500, total stock market. There's so many stocks and funds that you can look at. If you're a beginner, a great place to start as well is the model portfolios right here. So, you can check out all of these. So I wanted to share a few here. So if you want just stocks and bonds, this is a different mix of stocks and bonds, right? So 10-90, that means 10% of your money goes into it goes into stocks, and 90% goes into bonds, right? Every time you put money into your account, M1 Finance automatically splits it up, puts 90% of it into bonds, just the total bond market, and 10% of it into the total world stock market, right? Or you can do this one the other way around. 90% of your money goes to stocks, 10% of your money goes to bonds. You can see right here, it kind of says risk. Go away. If you have more bonds, it'd be lower risk. If you have more stocks, it'd be like medium risk. So one thing you can do is look at all these different model portfolios. And then let's see. So I wanted to pull up, and then I wanted to show what you can do next with this. So I have these two tabs open. So this one is the 80-20. So 80% stocks and 20% bonds, okay? And then let's look at the 20-80. So 80% bonds, 20% stocks. Then go to Portfolio Visualizer. This is a free website that works super well with M1 Finance. So hit Analysis and then Backtest Portfolio. And what this does, this is a free platform. What it does is you hit Edit Portfolio, and check this out. You can choose different funds, right? Look them up in here, and then choose the percentage for the allocation you want that to be, right? So you could do this with tons of different stocks or different ETFs that you like, or if you want to take a closer look at these M1 model portfolios, you can put them in here. So I have this one loaded up in here. So you can see I looked up those two funds that they're using. Portfolio 1, more bonds, has 80% bonds, 20% stocks. Portfolio 2, 20% bonds, 80% stocks. And then there's different settings you can look at in here. So let's say we're going to say that we're starting off with $10,000, and then hit Analyze Portfolios. And this gives you a ton of information about what happened from 2017 to 2026, the last 10 years. Almost, right? So I usually like to scroll down to the performance summary right here. So you can see more bonds versus more stocks. If you started out with this portfolio, $10,000, after 10 years, you would have ended up with $14,399, which is a compound annual growth rate of 4%, a little over 4%. And your maximum drawdown was 17%. If you did the one with more stocks, starting with $10,000, after 10 years, you would have $24,522 or $24,522, which is a compound annual growth rate of 10.38%, but had a maximum drawdown of 23.32%. So that means this was more risk, but a lot more return, right? Maximum drawdown means any point in the 10 years, your high down to a low. So at one point in these 10 years, you were down 23%. You lost almost a quarter of your money. But over the 10 years, it came back, right? Over the 10 years, you did end up making money. So just something to look at and consider, right? This shows a graph of the two different portfolios. So you can see over time, right? It's like, why would I not choose the more stocks option? But depending on what your goals are, if you want a little bit of a smoother ride, or maybe you have a shorter time horizon and you don't want to take risk because you're going to need that money soon, maybe you would just want to do this, have a smoother ride, a little bit of growth, right? Right here, December 31st, 2021, down to September 30th, 2022. I believe this is the drawdown, the biggest drawdown in here. So with the more stocks portfolio, the green line, you were at about 18,000, and you came all the way down to, let's say, 14,000. So you lost about $4,000, right? In that same period, with the more bonds, you're at 13,000, and then you went all the way down to 11,000. So you lost $2,000. So you lost less money, but you're also making less money, right? There's always risk and return, different trade-offs, different gimmies and gotchas, right? There's always different trade-offs, but there's so much more information that you can look at in here. And it's really cool. I feel like this was perfectly made to use with M1 Finance, because literally you choose the allocation in here, you can backtest it, and you can go over to M1 Finance and click add to portfolio, and then you've got it. You kind of know what this investment is going to look like. And past performance doesn't guarantee future performance, right? It won't be exactly the same, but it gives you a really good idea. I wanted to share another one. If you just go in general investing here, this could also be a great place to start for beginner. Just choose ultra conservative or ultra aggressive, Let's see. I want to take a look at moderately aggressive versus conservative. Okay, so moderately aggressive portfolio in the last 10 years has gone up 127%, which sounds great, right? And it wasn't always a smooth ride. You can see dips right here. You can see different funds in here that they have for you. So S&P 500, small cap, some bonds, emerging markets, real estate. That's kind of cool. Let's take a look at the conservative portfolio. So over the last 10 years, this was up 54%. So up a lot less, but as you can see, it still kind of had the same shape to it, but a little bit lower dollar amounts, maybe a tiny bit of a smoother ride. Like 61% of this portfolio is in bonds. And has these other things. So I loaded these two portfolios up in Portfolio Visualizer as well. So you can see M1 moderately aggressive and M1 conservative portfolios. And you can see a lot more detailed information, right? So moderately aggressive, if you started with $10,000, you'd have $21,579 or $21,579. With the conservative, you'd have $15,000. The difference in compound annual growth rate and the difference in drawdown, and a graph of what that kind of looks like. right? So again, you might think, why would I not do the more aggressive portfolio? Like, it's worked out great. But it depends what your goals are. If you just want a smoother ride, you're not too concerned about getting the highest return possible, maybe you just go with this. Or if you have a shorter time horizon, you know that you're going to need the money, maybe you want to be more conservative. So anyway, this is a free tool that you can use, and I think it works perfectly with M1 Finance. I'll leave a link to this in the description. I use it all the time to compare different funds. Like if there's a few different S&P 500 funds that I'm looking at, I will backtest them in here. If I'm thinking about making a tweak to my portfolio, I'll put my current portfolio in here, right? And then make different tweaks and then see what happens and then make more tweaks and see what happens and make more tweaks, right? So I know I'm a huge nerd. I think this is super fun, but maybe it'll be a cool tool to some of you guys out there. So I wanted to share it. Thanks for watching. And yeah, if you have any questions, I love talking about this stuff. So feel free to comment, reach out, and I'll see you on the next one. Bye.